Welcome, dear students. Myself, Himanshu Pandey, Assistant Professor, School of Management, BBD University, Lucknow. In today's lecture, we are going to start profit and loss account. In previous lecture, in our final account, we already discussed trading account and final account are there are two statements in final account. Number one is income statement and number two is balance sheet. In income statement, there are further two classifications. The one is the trading account and the second one is profit and loss account. So we already discussed about trading account. What are the trading account? How to prepare that trading account? What are the uh, expenses and incomes that incurred in trading account? By the help of trading account, we found gross profit. So every business concerned, there his main objective is to obtain the profit and loss at the end of the financial year. For knowing the profit and loss, the company has to perform final accounts at the end of the accounting period. By the preparation of trading account, company can find the gross profit, but the net profit is only find by the help of profit and loss account. In profit and loss account, we show all type of expenses which are not included in trading account. Like in trading account, we included all type of direct expenses, sales and closing stock. But in profit and loss account, we included all type of indirect expenses and incomes. So now see what is profit and loss account. Profit and loss account is prepared to find out the net profit and net loss of business. All those expenses or losses, incomes or gain which are not recorded in trading account are recorded in profit and loss account. So in trading account, what we have recorded, we recorded all those incomes and gains and all those expenses and losses which are not incurred in trading account, which are not entered in trading account. So what are these expenses and what are these losses? So we can say that indirect expenses and indirect losses and indirect incomes are entered in profit and loss account. While preparing profit and loss account, we shows all type of indirect expenses and all type of indirect incomes. So those expenses termed as indirect expenses because these expenses are not directly related to the acquisition of goods and bring them in sellable condition. So the expenses which are related to acquisition of goods and bring them to sellable condition is treated as direct expenses, but the expenses apart from these is treated as indirect expenses, and these all indirect expenses are included in profit and loss account. And all incomes that we occurred, all revenue that we occurred is entered in profit and loss accounts credit side. So if there is a balance in debit side, like if credit side is more than the debit side, then balance will go in the debit side. That balance is called net profit. And if this balance is entered in uh, credit side, then its balance is called net loss. So how net profit and net loss find by the help of profit and loss account? We have to know some expenses, some incomes which are entered in profit and loss account as debit and credit side. So if we found the net profit or net loss, so if total revenue is greater than the total expenses, then the balance is called net profit. If the total expenses are greater than the total revenue, so the balance is called net loss. Okay, so there are some items included in debit side of profit and loss account. So these expenses are called financial expenses, management expenses, sales and distribution expenses, and other expenses. Which are financial expenses? Financial expenses are like loan, interest on loan, discount allowed, interest on capital, bad debts, discount on bill discounted, bank expenses. All these type of expenses are called financial expenses. Now, what is interest on loan? If any business concern uh, take a loan from any business, any banking organization or any financial institution, so it has to pay some extra amount to the borrower, to the bank or financial institution as an interest. So that that is called interest on loan, and it is treated as expense. Discount allowed. What is discount? If we promote our goods to sale in the market and sale promotion, we have to give some discounts to the customer for more and more purchasing of that particular goods. This is called uh, the discount, and this discount is treated as discount allowed. What is interest on capital? If any interest if any interest charged on capital, that is called interest on capital. Bad debts. Bad debts are those debts which are not recovered in near future or which are not recoverable, that is called bad debts. And discount on bill discounted. And bank expenses. Bank expenses are those expenses which are charged by the bank for giving services to us. So these type of expenses are called financial expenses. Now, management expenses. Management expenses are those expenses which are related to the office, like salary of employees, printing and stationery, office rent, postage and telegram, lighting of office, uh, trade expenses, audit fees, directors fees, operating expenses, insurance, etc. These type of expenses are called management expenses. Now, selling and distribution expenses. Selling and distribution expenses are those expenses which are occurred at the time of selling of our goods. So the selling and distribution expenses are like carriage outward, advertisement expenses, export duty, commission on sale, commission to sale agent, insurance. So what is carriage outward? Carriage outward is if we are going to sell our product, we have to reach the marketplace, and our product is also have to reach the marketplace. For reaching marketplace, the transportation expenses are occurred, and these transportation expenses are called carriage expenses. And if we take it as outward, then it is called carriage outward. And carriage outward, it shows in profit and loss debit side. Like expense is also known as carried. That carriage, that is carriage inward, and carriage inward is shown in debit side of trading account. So outward is shown in debit side of profit and loss account. Advertisement expenses for promoting our promoting the sale of our goods, for consumer awareness or customer, for making consumer awareness, buyer awareness or customer awareness. The expenses occurred that incurred, that is called advertisement expenses. Export duty. If we are going to export any product to any other country, that is called export. The taxation has been paid on that particular export is called export duty. Commission to sales agent. If we recruit any sales agent for selling our goods, we have to pay some remuneration like commission and all. So this is also called an expense of selling and distribution. Insurance of goods sold. If we insured our goods that we have sold, sale in the market, that good that is called insurance. Insurance expenses of goods sold. Packing expenses and remuneration that we give to the agents. So these are the selling and distribution expenses which are occurred on the process of selling of our goods. So say there are some other expenses like depreciation. So what is depreciation? Depreciation is firstly chargeable on fixed assets. If we using any type of fixed asset by the passage of time or by the uses, so the price of that particular fixed asset is decreased by the passage of time. That a decrement of price in fixed asset is called depreciation. We have to find that depreciation every year, and this depreciation is treated as expense, and it will show in the trade debit side of profit and loss account. Okay, expenses with are which are indirect in character, and other expenses which are indirect in character are also shows in debit side of profit and loss account. Okay, items that shows in credit side of profit and loss account. All type of incomes, all type of revenues that we generated in our organization, that will be shown in credit side of profit and loss account. Firstly, we show the gross profit. What is gross profit? Gross profit is balance that transferred from trading account to profit and loss account. The debit that shows in the debit balance of trading account, and that is transferred to the credit side of profit and loss account. If there is a gross loss in trading account, then it will transfer to the debit side of profit and loss account. And commission received, discount received, interest on investment, interest on bank deposits, profit on sale of goods on consignment, interest on drawings, and rent received. These all type of all type of revenues that shows in the credit side of profit and loss account. What is commission received? If we receive any type of commission, if we received any type of discount, if we received any type of interest on investment, like we purchase a share of some other company and the company is gives us the dividend, so it is not treated as interest, but it is dividend on investment. If we uh, give loans and advances to any other person, and the interest charged and on that particular amount, that interest is received by us, so this is called interest on investment. Interest on bank deposit, what we deposited in our bank and interest gained on that particular deposit in saving bank or fixed deposit or any other deposit, so this is called what? This is called interest on bank deposit. Interest on drawing, like that drawing is an amount which is taken out from our business for the personal use of business, for the personal use of owner, that is called drawing. If owner pays any interest on that particular drawing to business, so this drawing is called interest on drawing. This is called interest on drawing, and it is treated uh, as a profit, as a income, and shows in the credit side of profit and loss account. And rent received. Okay, so these are some items which are shows in profit and loss account credit side. So there are some typical items. Some typical items like wages and salary, income tax, discount, unproductive wages, life insurance premium, depreciation, lighting, rents and rates. So what is the treatment of these particular items are? Wages and salary. You see, there are many times they are written wages and salary. If there is written wages and salary, so wages treated as first, and it is treated as indirect, it is treated as direct expense, and it will show in the debit side of trading account. If there is written salary and wages, it will treat it as salary, and it will show in the debit side of profit and loss account. So wages and salary shows in debit of trading account, and salary and wages shows in uh, debit side of profit and loss account. Income tax. Income tax is treated as the personal expense of owner. It is not shown in debit side of profit and loss account. It is shows as the personal expense of owner. Discount. If there is discount received, then it will show in credit side of profit and loss account. If there is discount given or discount allowed, so it will show in the debit side of profit and loss account. If there is nothing written, discount received or discount given, so where the discount appeared in trading trial balance, if discount is appeared in debit side of trial balance, it will treat it as discount allowed. If discount appeared in credit side of trial balance, it will treat it as discount received, and it will treated as the rule. If discount received, so it will show in the credit side of profit and loss account. If discount given, then it will show in the debit side of profit and loss account. And unproductive wages is not shows in debit side of trading account. It will show in the debit side of profit and loss account because it is unproductive wages. Life insurance premium is also treated as personal expenses of owner, and there is no need to show in profit and loss account or trading account or balance sheet, because life insurance premium is for owner, not for business. And there is a business entity concept in our accounting, that's called business. Entity of business and the entity of owner are two separate things. The asset of business is not related to owner and the asset of owner is not related to business. Though both are two different entities, both are two different persons. So the life insurance premium is paid to the life insurance company by owner for its own, not for business. So it will not show in the profit and loss account. Depreciation. See, if the depreciation given inside the trial balance, then it will show in the debit side of profit and loss account, and it will not show any other place. If the depreciation appears outside of trial balance, then it will show in the debit side of debit side of profit and loss account first, and after that it will show in the uh, balance sheet by subtracting of concerned asset. Okay. Lighting. If lighting is written as factory lighting, then it will show in trading account. If lighting is written as office lighting, then it will show in the profit and loss accounts debit side. Rent and rates. Office rents and factory rent. There are two different rents. If there is written factory rent, then it will show in the trading accounts debit side. If there is written office rent, then it will show in profit and loss account debit side. If there is nothing written with the rent or like office or factory, then it will treat it as indirect expense and shows in profit and loss account debit side. So there are some difference between trading account and profit and loss account. Let's see what are the differences are. Trading account is prepared to calculate the gross profit or gross loss, and profit and loss account is calculated to uh, uh, is prepared to arrive at net profit or net loss. So trading account is prepared for prime objective of preparing trading accounts to know the what is gross profit or what is gross loss of our organization, and profit and loss account is prepared for knowing the profit, that is net profit or net loss of our organization. In trading account, cost of goods sold, sales and direct expenses are credited, are accounted. But in profit and loss account, there are indirect expenses such as administrative expenses, selling expenses, etc. are charged against the gross profit and other revenues. Okay. The result of trading account is called gross profit, and the result of profit and loss account is called gross profit or gross loss. So this is called the difference. These are the main difference between trading and profit and loss account. Now see the format of profit and loss account. This is the format of profit and loss account. There are 4 columns. First one is called particular, second one is called amount, third one is called particular, and the fourth one is called also amount. First 2 columns, particular and amount, is called the debit side of profit and loss account. Second 2 columns, particulars and amounts, is called credit side of profit and loss account. In debit side of profit and loss account, we show, let's see, gross loss and all type of indirect expenses which are not shown in trading account, like salary and wages, rent and rates, printing stationery, postage telegram, insurance, office lighting, repairs, depreciation, audit fees, bank charges, legal charges, discount allowed, bad debts, etc. These type of items, though, which are shows in this table, these all items are indirect expenses, and all indirect expenses are shows in the debit side of profit and loss account. All type of indirect all type of revenues and gross profit are shows in credit side of profit and loss account. So let's see, gross profit is shows in credit side of profit and loss account, that will occur in debit side of trading account. Now it will show in the credit side of profit and loss account. Gross loss occurred in credit side of trading account. Now it will show in the debit side of profit and loss account. So what are the revenues that we have to generate? There are some revenues are entered in credit side of profit and loss account. This is interest received, rent received, commission received, discount received, all type of receipts, profit on sale of investment, profit on sale of any asset, or miscellaneous expenses. So this is called all revenues and gross profit. After the preparation of this particular trading profit and loss account, you have to compare credit balance with debit balance. If credit balance is more than the debit balance, the result will be net profit. If debit balance is more than the credit balance, the result will be net loss, and both the results in both the cases transfer to the capital account. If there is net profit is transferred to capital account, it will add to the capital. Okay, it will add to the capital in balance sheet's liability side. In balance sheet's liability side. Or if there is a net loss, then it will subtract from the capital in balance sheet at liability side. Again, see, if there is net profit, then it will transfer to the balance sheet in capital and it will add to the capital. And if there is a net loss, it also transferred to the balance sheet in capital and it will subtract from the capital because it impact on negatively on capital. Okay, now see one question of profit and loss account and solution of that particular question. So first of all, see the question. The question is, from the following particulars of Suresh Traders in respect of the year ended on 31st March 2016, prepare his trading and profit and loss account. So our trial balance is given over here. Opening stock 8,000, purchase 50,000, purchase return 300, return inward 600, sales 82,000, credit in carriage inward 200, wages 500, rent and rates 300, trade expenses, discount on purchase, commission, salary, legal expenses, audit fees, bank charges, sales tax, interest on drawing, interest on investment, repairs and renewals, etc. So this is called a total question of profit and loss account and trading account, and the closing stock is shows outside of trial balance. So first of all, we have to find out which are the indirect expenses and which are the direct expenses. All direct expenses are treated as trading accounts expenses and all indirect expenses are treated as profit and loss account expenses. Direct expenses shown in debit side of trading account and indirect expenses shown in debit side of profit and loss account. So outstanding expenses, it will show in the debit side of profit and loss account. Purchase, it will show in the debit side of profit and loss account, and purchase return, it will subtract from the purchase. Sales shows in credit side of trading account 82,000, and return inward, it is also called sales return, it will subtract from the sales and net sale will find after that. Carriage inward, it is a direct expense and it will show in the debit side of trading account. Wages, it is also an indirect expense and it will show in the debit side of trading account. Rent and rates, rent and taxes, it is treated as the indirect expense and it will show in the profit and loss account debit side. Trade expenses, profit and loss account debit side. Discount expense, discount, profit and loss account debit side. Discount on purchase, it is an income and it will show in the profit and loss accounts credit side. Commission, that commission is given in debit side of trial balance, so it will show in the debit side of trial balance. Sorry, debit side of profit and loss account. Commission, salary, debit side of profit and loss account. Legal expenses, debit side of profit and loss account. Audit fees, debit side of profit and loss account. Bank charges, debit side. Sales tax, debit side of profit and loss account. Interest on drawing, so interest on drawing given in credit side of trial balance, it will show in the credit side of profit and loss account. Interest on investment, it is also an income, or we can say that it's a kind of revenue, so it will show in the credit side of profit and loss account. Repairs and renewals, it is also an expense, that is indirect expense, it will show in the debit side of profit and loss account. And closing stock is always shows in the credit side of trial balance after trading account after sales. Okay, now see the solution of that particular question. Opening stock, trading and profit and loss account for the year ended on 31st March 2016. Particulars amount, you make pro forma for that. Opening stock 8,000, purchase less purchase return, then total net purchase is occurred, that is 49,700. Wages, that is direct expense, it will show in the debit side of trading account. Carriage inward, it is also a kind of direct expense, it is also shows in the debit side of profit debit side of trading account. Sales 82,000 minus sales return 600, 82,000 minus 600, the balance is called 81,400. Closing stock 1,000. You add both of these, sales and closing stock, the balance will come 82,400. And you add the debit balance of trading account, and after that compare credit balance to the debit balance. So see, there is a gross profit, so the credit balance is more than the debit balance, then the result will be gross profit, and the gross profit is 24,000. That gross profit transferred to the profit and loss. Now we start profit and loss account. After that, we see some expenses, some indirect expenses like salary 2,000, discount 40 rupees, commission 10 rupees, legal expenses 50 rupees, audit fees 60 rupees, bank charges 40 rupees, sales tax 50 rupees, repairs 260 rupees, rates 300 rupees, and trade expenses 600 rupees. This is all kind of indirect expenses which are incurred in trading profit and loss account debit side. Now some incomes, or we can some revenues, discount on purchase 50 rupees, interest on investment 200 rupees, and interest on drawing 60 rupees. Then we will add this, and the result will come for 24,310 rupees. We add 2000, 40, 10, 50, 60, 40, 50, 260, 300, and 600. Total, we have to total these items, and after that compare debit balance to the credit balance. Credit balance is more than the debit balance, so the answer will come as net profit, and this balance appeared in debit side of profit and loss account, and this is called net profit of profit and loss account, and it will transfer to the capital account. In capital account, further it will add in the capital account. So let's see again what we have done in profit and loss account. First of all, we transfer the gross profit from trading account to profit and loss account, from debit side of trading account to credit side of profit and loss account. Then we find in trial balance all type of indirect expenses and shows in debit side of profit and loss account these salary, discount, etc., and all type of revenues that we found in the trial balance, it will show in the credit side of profit and loss account. Then total of credit side and total of debit side, both debit and credit compare, and we find a net profit. That net profit is 20,900, and that net profit is transferred to the capital in near future for finding out the financial position of our business for preparing balance sheet. So this is all about profit and loss account. In next lecture, we will discuss about the balance sheet of organization, how to prepare balance sheet, and how to prepare trading profit and loss and balance sheet collectively. So this is all for today's lecture. Thank you all.